welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the RationalInvestor.com's weekend frivolity with the Beamish. As Matador says, unleash the Beamish. Roar! Here I am once again. Most important thing here, how can I possibly make a positive difference in all of your lives? Probably in this kind of environment, I'm unfortunately going to be the voice of reason and maybe kind of try and calm people down and slow people down and encourage them not to chase. And try and respect these cycles. Unfortunately, and I already start to see the drum beats beating we're not allowed to say the phrase, the TTID phrase starting to come out of the woodwork, which is pretty typical, not surprising whatsoever. Actually, getting this show ready today, I actually heard news of something I haven't heard in crypto space for a while, but it also too is very typical, not surprising, and is a sign unto itself. It's a bit of a warning sign, and actually, Chris articulated it really well in the newsletter here this week. Monero XMR experienced a major stress test when Cubic, not even sure who that is, briefly controlled over half of its network hash rate, yada, yada, yada. You know how that story goes. So, but I did find interesting just getting this ready, and you don't believe in cycles, check XMR's chart out. I was shocked. Of course, maybe to preface this, we'll show you the Bitcoin cycles. Really nothing new here. It is POW, which means it is by definition a rise-only market. You just got to make damn sure not to go and invest into these peaks because you're going to get your ass handed to you. And really the only way to sort of figure out what these troughs ultimately are is if you think of cost of production. And usually what ends up happening, I've found in this space, is the market usually corrects a good 80% of its previous cycle moves. So with that said, we don't have a top in here yet, obviously, but we definitely know what the low is. So you can drag your sort of little drawing tool, try and figure out. I have just here on this screen 280,000 as a peak. I don't know, maybe it'll hit that, maybe it won't. And the irony of it all is that actually when you adjust these levels, based on whatever your peak anticipation is, you notice that the reload zone doesn't really change a hell of a lot. So, wherever we do top out, there's 80%. If we top out at 200 and some odd thousand, that's based off of this base through the winter cycle. And I'm just eyeballing. It's not completely accurate. I understand that, right? Something like that. You can see where we're probably going to correct back to. And if anything, I like the $50,000 mark as a nice psychological level. And ironically enough, if we do 80% corrections and we happen to top out at say 250,000, well, that takes us right back down into that 60, 70,000 area. And interestingly enough, kind of a fun side, WD Gann, he used to always say that you just take whatever the high is of any particular cycle and you just divide that by 2. So this cycle over here, its peak was I think it was like 19,000 or something. And what a surprise, half of 19,000 is 10,000. Well, that happened pretty damn quick. This peak here, 69 and change. So half of that's 35-ish. Well, we went all the way down to 17, 18. So at the very least, you sort of have a minimum correction level. Just think of WD Gann. And at the most, and what I would expect is an 80% correction following this peak. But just keep these kind of references in mind. 17, 18, of course, that's when I did all of this kind of silliness. And you have to understand that these kind of silliness only happens when you're in these 20, 30 year, well, 20 year, we'll say, cycle pivots, this kind of funny talk where you can take like no money at all and just, get stinking rich. I remember through the .com days, people were literally registering domain names for like 35 bucks and then turning around and flipping them, just listing them online, and stupid companies would come along. Pets.com, okay, I'll pay you $10,000 for that. Just that's sort of the behavioral pattern through those fluffy kind of stupid cycle peaks. And I think to a certain degree not necessarily in Bitcoin's case, but definitely in the sort of, remember the whole building out of the DeFi space and all that into this cycle peak, those DeFi, remember Danny and Magic Internet Money and all that kind of craziness. But just this is cool, eh? 17, 18, okay, fine. 21, 22, okay, fine. Now let's go look at XMR and check this out. This is freaky. Are we near some sort of cycle peak? I found that rather amusing. And then given Chris's guidance here on the newsletter and what's going on, and the irony of crypto is that these networks and, probably a lot of people that are just getting involved in this space, like Jim and Liz. Hey, Jim and Liz, nice to see you. You probably have no idea about something like proof of work. I don't know, correct me if I'm wrong, but my hunch is most of the people that actually have come into this space get rich from trading. Oh, look at me, I'm a crypto boss. They really don't understand what was the original selling feature of these networks and why, what gives these networks actual value. Half of our gripe these days with the fiat currency system is there are very few select people that literally get to decide when we all have to bend over and take it up the ass through this basically made up concept called inflation. And really all inflation is just, as we say, the Great Reset. Ironically enough, that World Economic Forum guy kind of spilled the beans. And I have a feeling that a lot of those banksters noticed they got rid of the M2 money supply data. Coincidence? I wonder. Because I've often told all of you that you think the inflation that we saw there a few years ago with that silly sickness, you think that was bad? Oh boy, you ain't seen nothing yet. Which really sucks. But that was the big selling feature of crypto to begin with, is that you would not have a situation where a very few select people could actually manipulate the blockchain and the data on the blockchain to their benefit. Well, and that's exactly what something like what just happened with XMR here. And I think it's actually a very real vulnerability, especially considering the significant influence these exchange traded funds and the advent of the ETF industry and the way that, clowns like Mr. Fink there could basically dictate corporate policy right across the economy simply because of the amount of weight that his particular exchange traded fund happened to have in an asset. And oh, what a surprise. If I'm not mistaken, I do believe that Mr. Fink has basically taken over the crypto story with the ETF advent, which in itself is a little bit dangerous. And if anything, I think it underscores probably a necessity to really understand the fundamentals of what it is that you are quote unquote investing in. Because at the end of the day, keep in mind, Wall Street is here to make money. That's really at the end of the day all they care about, right? Number goes up. And you can also make a lot of money convincing the public to come in and buy cycle tops and buy peaks, and then maybe even not only sell the assets that you bought when nobody was interested, but actually even maybe outright short the asset. Bit of a sobering reminder to everybody involved in this space. Of course, sadly, not very sexy sex appeal. I noticed somebody put out a video with a headline, "Cryptocurrencies exploding!" And all of a sudden, a whole bunch of video views that I haven't really seen that person get a lot of video views. So you can clearly see the clickbait sort of environment is definitely in place. The irony of it all is that I guess about a year and a half ago, when the media and the public were all wrapped up in Sam Bankman-Fried trials, and the price of crypto in general had absolutely collapsed, Bitcoin going through its winter cycle. I guess that would be sort of right in here. I had a very simple message for the world. Does anybody remember what it was? See if anybody was even around. I know, Nore, you know this. Adam, you'd know this. But I had a very specific message to the world, and gee whiz, and every time we go into this window here, it's the same damn message. You can see exactly the same in here. Does anybody remember what I said? See, there's 37 big people watching. Retail isn't in this market yet. Too scared after last cycle. Well, yeah, and I'd say yes and no. I do see a lot of these, what are they calling them? Crypto treasuries plays in the stock market. So the public's getting all encouraged to participate in those names. Yeah, well, yes and no, Matador. I think that you're at the stage now. You understand this game. I wouldn't consider a guy like you, Matador, to be quote unquote retail. Keep in mind, most you want like the absolute perfect analogy of retail is this guy. And it's not a diss on him, but if anything, if you watch and this is a pretty old video now, but I think, oh, look at that. Look at that. It doesn't even come up on the list. Isn't that interesting? So look at all this. What shitcoin to buy? That's not what I was searching for. Maybe I have to put it in quotes. Because I think if anything, I think this look at that. You can't even find it on here anymore. Isn't that fascinating? That's incredible. Wonder what I'm doing wrong here. Anyway, I suppose I probably should have his link handy. Isn't that interesting how it's basically gone? Anyway, I think his name was Finkel something or other. He was German or Scandinavian or something like that. And you can't even look at that. You can't even find it. Has like Google been scrubbed? Is that what's going on? Maybe we go YouTube. I hate when I do this. And then 5 minutes later, I've lost all your attention. Look at that. Oh, there it is. Finally. Anyway, and who knows? This is probably somebody else's repost of this. So this is actually typical what retail does. He's on Coin Market Cap. He's like, maybe want to trade some shit coins. Oh, maybe because I didn't have trade. Open up that wallet now and send those coins away. I mean, it's adorable. I think it's a perfect analogy. I probably get copyright shit on this thing for playing this. But if you actually like listen to the video, he's like, "Oh, I'm on Coin Market Cap. Oh, this one's up. Oh, look at that one. Oh, that one's down. Oh, should I buy this one? That's actually a typical retail, which is kind of sad. And just a simple fact, if you even understand the concept of the reload zone and incorporate that into your thinking, then I can't categorize you as retail anymore. Sorry, the Matador. I know you want to, but unfortunately, can't put you in that category anymore. Anyway, off on a tangent there. Sorry about that. So it doesn't surprise me. And what probably happens here, and thinks SBF, it's the same thing, is the crisis, the scandal, the over the top outlandish fraud that will actually bring this market to an end. It's actually happening now as we speak. It's just unfortunately, we in the public, and this is actually a core concept in my education, is the difference, and you as a trader, I think it's important that you realize this, the difference between the fundamentals that are out in the marketplace now that are actually at work and the known fundamentals that are actually being touted by the media and influencers and all that kind of stuff. Huge difference. Nobody in the public is talking about the concentration of influence in the crypto space by these exchange traded funds and how quite literally they have securitized these assets. I think that's probably a pretty good example if you actually broke down the significance of their holdings and on market action. In fact, this week's options expiry was a really good example of that. Theoretically, we're in some sort of big bull market, rah, rah, rah. Oh, higher highs and higher lows defines a bull. And frankly speaking, I don't see anything that's changed here to change that opinion. So why did we stall out there midweek? And what was fascinating is if you actually look at this asset, the exchange traded fund, you can see we were ripping higher. And it's funny, Johnny Bollinger, he even put out a tweet, Bollinger Bands, saying that he was fearful of some sort of head fake here move. And then why did Thursday, Friday, the price of this asset come off dramatically? And ironically enough, I think the answer is basically in the options data, right? Options are the way that Wall Street works in this world. It has absolutely nothing to do with the SEC. There's really no public oversight. Thank you, Joshua. Say hi to Liam for me. But I actually think that if you look at this data set, I think this is pretty telling. The fund itself went out at 66.44 here. I think that was our last trade here on Friday. Yeah, 66.44. And interesting how 66.50, all of these call options all expired worthless. Oh, hello. Look at that huge open interest. And look at the insane volume around this 67 call. It expires worthless. And look at all of these calls going all the way up here. This unfortunately is the public. And the public they spent a ton of money. Now, the public does write covered calls. So you could argue to a certain degree, and also institutional players could argue a lot of these calls. The writers of the calls really don't want to see the asset actually expire where the asset is actually called away from them. So I don't think it was an accident that you saw Bitcoin come off there at the end of the week, just to make darn sure that as many of these call options that could expire worthless. But that was also an interesting data point on the puts. Most of the puts are actually written by institutional players. So this heavy open interest on the $70 put here basically expired on Friday. That expired in the money. And I've been seeing this a lot out of this Bitcoin ETF recently. So what this means is whoever wrote this 70 put, they are going to be forced to buy Bitcoins. And 34,000, let's call it 35, just simplicity's sake. That's 3.5 million shares at $70 a share. That's a bit of money. Yeah, between me and you, somebody's going to plunk down $250 million in the Bitcoin ETF that they must buy. This expired in the money, auto exercised. And I'm seeing this repeatedly over and over and over again in the Bitcoin space. Now, in comparison, if we look at like the S&P 500, what does a normal market options expiry look like? So here's the S&P 500 at the time that I took this screenshot, 644.41. Notice here is like 644 even. So this option, and I don't know whether they took it out above 650, they might have. But the point of the matter here is this is what usually this option chain looks like, where Wall Street will screw around with price, try and get the public to panic buy put options, and then they'll mysteriously bump the price up into options expiry. So all of these puts expire worthless, and you can see how much they're on the hook for. And it's one hell of a weekend in the Hamptons. So that's normal. But I've been seeing repeatedly of late that really, really, really big open interest strikes are expiring on the put side, are expiring in the money. And keep in mind, retail doesn't write put options. That is way beyond their skill set. And it's also usually way beyond their margin requirements. They can't handle the margin stress. So where did that YouTube page go? Is that over here? Hey, there you guys are. So the message I'm getting as a guy who's been playing this game for 40 years is Wall Street keeps getting more and more and more long Bitcoin through the ETF. Something's going on here. And, considering our cycle apex event here, and, I hate to say it, but on a weekly sort of short-term basis, I don't actually see any technical damage that's been done here. Yes, this week has produced a shooting star, but we had the 3-bar fractal that reversed this 3-bar fractal top. I might actually argue that, all we are is range bound. Top of the end of the range, this week's high up there at 124. Bottom end of the range, that 2 weeks ago low there at 112 area. And I'd also say too, but I don't think I have it on this screen. Maybe I have it over here. When I saw this chart this week, but maybe it was off a 4-hour basis. One gentleman that I work with relatively closely, maybe actually was off the total. Yeah, there it is. I thought this was fascinating. This is sort of what I'm expecting out of the broader crypto market, the Shitcoins, excluding Bitcoin and ETH. This does feel very Elliott wave-ish to me, but interestingly so, if that's the case, 2 to 3 should actually be the biggest move. We do also have a very significant celestial event coming up here, and I think that's also part of our conversation about expectations around Bitcoin. And I actually like the idea. If we think back to what previous cycles, this was the previous Trump presidency and how this asset behaved into the last month of that particular cycle. Basically, the market was going parabolic straight up. And I do find it very interesting that when we look at the Bitcoin cycle here in the near term, there is that celestial event. And I have a funny feeling that coming out the other side of that celestial event, oh, what a surprise, that's just about exactly 1 month before the cycle apex event. So call me crazy, many do, but I actually think we're probably going to complete this smaller ABCD up into this event. Then we're going to have some real screwiness through this eclipse window. You can see how screwy price acted in here through the last celestial window. And then my hunch is because the cycle pivot is in the latter part of October, we get one more final push up. And this is where basically the price is going parabolic straight up. No, and you're an idiot for not being long Bitcoin, and it just keeps going up day after day after day. And what ends up happening through these cycle pivots, I've been through this now 3 times with Bitcoin, is you almost become, like, in a weird sort of way, a little bit shell shocked that as the price is climbing higher. This one wasn't so much because I think it had more to do with DeFi and its building out, but this one definitely. And then I also remember this one in particular, also the same thing. I mean, I remember this one guy, he had like 50 Bitcoins, I think. Was it 50? Might have been 500. Anyway, and as this was happening, he was like, I'm made in the shade. I can start thinking about retirement plans. And then all of a sudden, Mount Gox happened and they were gone. But the point here is that through this phase, people were in absolute disbelief. And they were just absolutely shell shocked. And of course, this is when I first came into the space, and none of the people that I talked to on TradingView had any clue about TA, and they didn't really understand that that was the end of the move, not necessarily the beginning. And then we had to go through the correction phase. And I remember one guy, he literally lost his lunch on this event here. And I was actually really fearful of him that he might take his own life. So the emotions are super duper jazz. But the point here is that when we go through these cycle peak events, people kind of you just become absolutely shell shocked, and people's trading plans and all that kind of stuff just goes right out the window, and the circle jerkers take over, right? And it just becomes almost like a cult following, where I remember just even when I was in El Salvador there a couple of years ago, I guess that was maybe back here. And we were talking about Gucci sweater wearers and all that kind of stuff. So you're going to get that kind of behavior through this cycle event. And my hunch is actually at the top into October or wherever the hell it comes in, maybe when somebody really ought to remember when that Gronk thing said that Bitcoin was going to hit 400,000, because I always had this $400,000 price mark floating out here. This is obviously based on logarithmic scale. I don't know whether the log scale's usable in this kind of environment. Maybe the asset's just gotten too big. I don't know. This is just a linear scale with a little bit more conservative price objectives. And this is just classic parking garage. There's a bunch of levels up here. There's a 4669 and 877. There's the parking garage of the previous trading range. You can see what the previous parking garage that was off of this range extension had to stop the bull So the way I'm looking at it is this is more of like the conservative price expectation, and this is the oh man, the wheels just fell right off the bus and the thing's just going absolutely parabolic. And frankly speaking, I'm not going to get into the business of calling tops, picking tops. All I'm going to say is just put yourself in a position that if this does happen, you get rewarded. All right. And everybody should be able to come up with a trading plan to be able to do that. But the problem here is this really a good place to come to this story as a new participant? You're kind of asking for trouble. Anyway, if anything, I'd almost say the public service message to the public, that's the right message. And of course, this is always difficult to say. This is like a Gail Dudak message. If you are a gnarly old timer in the market, or if you're a student of mine, you'll know who Gail Dudak is. This is almost the exact same as I would be sitting with her as a bear on Louis Rukeyser's panel of elves, and everybody else in the public is uber bullish, and they're all looking over at me and laughing at me. I haven't got to the point where I am bearish, but I can absolutely tell you once we get on the other side of this cycle event, I actually like the idea. I was talking to an options buddy of mine, and I actually really like the idea in the new year of actually creating a Bitcoin shorting plan, where basically we go and buy put options or bear put spreads, or even covered puts, I suppose, to a certain degree, but I don't know whether I'd get into that. On the Bitcoin ETFs. I actually think that's probably the smart trade once we get into the new year. And then, just trade setups, you know how it goes. Anyway, so, this the wind's still at our back here. I do think that a lot of this action here had everything to do with that options expire around the IBIT. And how appropriate, isn't this absolutely stunningly appropriate? Your friend and mine. And of course he has the absolute perfect last name, eh? This doofus is now taking over for Klaus. You will eat the bugs and you will be happy. And how ironic. This darling asset that we've all been in love with for the past 10 years is now basically in his hands, and to all intents and purposes, it is in the World Economic Forum's hands now. Isn't that ironic? What a twist of fate. Anyway, interesting. So that's sort of the backdrop of what we're coming into here over the next month or two. If anything, and I didn't even hear anybody answer. Maybe none of you are actually here. But what was Brian's big message to the public right around here? Anybody remember? See if anybody can remember. 4 words. And I got to tell you, I mean, it worked like a charm. No, that's not what I said. Because I mean, I think it's pretty easy to just go and buy something, but at the same time, too, once you bought, do you really know what the hell you're doing? Do you have a plan going forward? Thank you. Gnome was the only person who got Noam Chomsky. That's a cool name. Only a Canadian would know the reference to that. Noam Chomsky. That's hilarious. You must be Canadian. Anyway, maybe yes, maybe no. So can you appreciate that, when Brian says get your shit together? Well, that's basically what I was expecting. Look for your skirts. Yeah, close. Yeah, anyway. So is now the time for you to come into the market? I don't know. I think the public is walking into a huge trap here, which sucks. I mean, that's typically what happens to the public. So please, everybody, understand the context of where we are. I mean, this was $14,000. If anything, it would make absolute perfect sense that this thing actually tops out at 10x that number. That happens all the time in the stock market. Do we get two, three, $400,000 a coin here on this cycle? I will be perfectly blunt with you. My expectation of that event is waning as we go along here. Doesn't mean it can't happen. And if that does happen, and you all know what my plan is, but if it doesn't happen, I won't be doing anything. I'll just leave everything alone. And I'm not really in a big hurry to spend any money. And of course, as soon as you sell, of course, there's a big tax bill, right? Ugh. Don't want to have to deal with that. I've got other shit on my plate right now. So I like the idea that we're coming into a blow off top. But just understand the context of where we are. Just please, everybody. And I thought it was absolutely fitting that this Monero chart just so happened 1718, 2021. Well, here we are, 25, 26 kind of idea. Pretty typical. So, my strategy here going forward over the next couple months is everything that in blue you see I bought for TRI, and just letting the market do its thing. As stuff pops, I'll pay myself. So, this past week, and just everything that I do, nothing really new here. This little guy here popped nicely. It was a cute little buy off the bottom. If it'll load up, Jesus, how long does it take to load? And boom, out goes halves on doubles. It's not necessarily like I'm calling a top here. This is just a simple plan that just keeps me out of trouble. I don't overthink this stuff. I don't try to outguess the market. It's just a really simple plan. If the asset doubles in price, let half of it go. And every time it keeps doubling, just keep letting half of whatever you got left on the books go. Sometimes you look like an absolute genius, especially if this thing goes up like 10, 20, 100x or whatever, because you're still long all the way up at the top, banging out 5, 6, 7, 8, 9 doubles. I've done that in the past. But 9 times out of 10, the most important thing here is just I've de-risked myself. I don't know. I could like literally kill any other sell orders. I have no risk in owning this asset now. And that is the most important thing, I think, between the difference between a professional and amateurs, is they just don't appreciate risk. Ironically enough, Trump's Treasury Secretary is all about, I'm a risk manager, risk first approach, all that kind of talk, right? Mr. Hedge Fund Billionaire Gazillionaire. So if it's one thing that you hopefully can learn from the Beamish and the Beamish experience, is just get yourself into that risk-free position as fastly and as efficiently as possible. This happens to be a really simple strategy that I would use with my sort of conservative non-trader type clients when I was a broker. Just keep it simple, stupid. We affectionately gave it the name, the little old lady strategy of risk management. When I first wrote this educational program 10, 15 years ago, it's remarkable to watch how many different bastardizations of this, this concept people have sort of expropriated over the years. And I suppose that's the one downfall of this silly internet world is nothing's really copyrighted in this world. But it's just one way to play the market. And you're right, Jim, right? Little old ladies never went poor by overcomplicating things. You'd be surprised how many guys are like paper billionaires and then next week, oh, and it's gone. Well, what happened? Yeah, well, there are different ways to manage that. Get yourself into a risk-free trade as fast as possible. And it's funny in the, I could just show you different examples. In the option space, it looks something like this, where you buy a whack of these options on all three of these trades. And I'm actually quite surprised at how Intel has come charging back here. But all of these, and actually, this isn't a bad batting average, 75%. That's not so bad. And keep in mind, I still got a ton of time on Moderna. I don't know what the fuck it's going to do. It might perform. But, like this Beyond's a really good example. This is playing the options market, but it's the same principle. Just try and get yourself into a risk-free position as fast and as efficiently as possible. So in this case, I sold 2/3 of the option spread. This was a bull call spread. So 2/3 of the position at a double, which actually books a 40% gain on the trade. And now I have a risk-free trade on whatever the hell this spread does going forward. No risk whatsoever. And spreads are interesting because they have a built-in maximum profit. But I don't care if this thing goes to zero. All right, well, the rest of the money, I've already booked 40% return on my money. I think if you go to Wall Street, I think they say that if you do more than 30% annualized rate of return, you've like beaten 90% of all investors ever. This is 40%. And I still have the free position. If the free position works, oh my goodness, the percentages go crazy. So that's another way. Obviously, little old lady's got no business trading option spreads. That's for damn sure. But that's another way to play that. Get yourself into a risk-free trade as fast as possible. I understand a lot of you probably aren't options oriented, so that's totally understandable. They're very esoteric products. But, if we head on back over to the crypto space, it's the same logic. Nothing really changes. It's just really a question of what kind of risk did you take. So, for example, here was a strategy, and I use this a lot in the futures trading, day trading futures contracts, where I'll strap on a position. And especially if you're like trading, right, kind of idea. A little old lady, it just doesn't make sense. Especially if you're using leverage or margin or anything like that. Little old lady, sorry, you're not invited. So here's a situation where this is a trade and you got to basically risk down to the break of the original structure. So there is my risk window. And I just want to make damn sure that if I'm right, I get paid relative to me being wrong. So in this case, you can see I have my profit objective sitting there, and I will take 50% profit on that event. And this really should be 2-to-1. Not quite sure why it says, oh, excuse me, this is 1.5-to-1. Wait a minute. Why do I have different numbers on here? Actually, I think maybe I'm running two. Okay, I'm not quite sure what I've done here. I don't know why that says one. Oh, I guess that's the dollar figure of profit. So anyway, point here is 2-to-1 risk reward. So this would be an example of maybe somebody who's trading a futures contract on like say a 3-minute, 9-minute, 15-minute chart kind of idea, or like Joe 6-pack, if you're actually going to buy the asset. Typical investor, when I was a broker, I'd say, take a shot. If the asset doubles, we'll let half of it go, get your original money back, or 2-to-1, whatever the risk, doesn't really matter. Point here is we're not allowed to risk more than 50% of the amount of money that you've invested. That's typical Joe 6-pack. So in this case, all right, I'm going to buy it at 9. I'll risk down to 8 and change. So I'm going to take what? I don't know, 7-8% risk on the trade. Is that right? Actually, it's not as much risk as I thought. And I'm going to force myself to sell half of the position at 2-to-1, put my stop at scratch on the remaining, and I've built in a risk-free position. In fact, this is kind of a funny one because I kind of fucked it up, but to all intents and purposes, good part about working with plans and setups and stuff like that, as long as you get to the point where you are given permission by your setup to move your stop to scratch, well, technically you can't get hurt on the trade. In this particular setup, we actually had move stop to trailing level hit. And if I was a little bit sharper on my game, I'd use that 3 high low method that I teach in my level 3 class on stop management. I think I would have been politely told to exit around, what about 119 or so, something like that. You can see the 3 high low method here. So 1 low, 2 lows, 3 lows, maybe somewhere in that area. But I was lazy. And, the interesting thing about trading is, as I said, the biggest thing is to just get your stop. Give it whatever setup you use, whatever pattern you like to trade, whatever your criteria is, just get to that point where you can establish a risk-free trade. In this particular case, didn't really make any money on this. But if we do come down to this 25 level, you can see the stop is sitting there. I never did move it off a scratch, then I'll just walk away at scratch. But the point here is, regardless of Brian kind of fucking up this, try and work with plans that force you to try and create those risk-free positions as fast as possible. It helps in trying to keep this stuff on the top of my head, and you can see it's going. But anyway, so there's a million different ways to skin that, get yourself into a risk-free trade as fast as possible. In fact, actually, if I was futures trading this, I might have even, a lot of times in futures trading, I'll say if the market can go to 50% of the anticipated move, I might even just move my stop to scratch at that point, and I would have been blown out of here at scratch on that dump. 6 one, half dozen the other, I suppose. This one here, I just simply said, you know what? I like this risk. Let's see what happens. Anyway, it's fascinating to watch this play out too. I mean, ironically enough, just absolute textbook dumps into levels that I teach all of you in this education program. And it really shouldn't surprise. I've noticed that anything that's Trump related, it follows trading sort of rules very, very closely. I think a lot of the hedge fund guys like to trade Trump assets. And also too, if I'm not mistaken, they use things like liquidity events. This was his big circle jerk orgy dinner thing. That turned out to be a sell the news event. So it was buy the rumor, sell the news. Once the news is out about their funny little dinner they had, and the crappy food that they served, the thing just collapsed. Anyway, let's see. So I'm just running my little small business of trading. Try and put myself into a position of strength, and then that way try and keep as much of the hair on the top of my head as possible. Interestingly enough, I will say that actually I have been doing a bit of buying here on some of these names. I work stink bids to try and add to positions as they're coming down. And, following the Trump election thing there with that crazy rally, a lot of these assets just completely puked out on the other side of that event. Not really a big surprise. This is probably a pretty typical example. I know one gentleman who was an OG on our site for quite a while. He was pretty optimistic about this project. I'm not quite sure if the project's even still legit or not, but this is a pretty good example of what I'm doing right now in anticipation of that cycle peak event here sometime in October. And for whatever it's worth, I might even find, or you might find, we might find, whatever, that you might even see that the altcoin market, especially all the machinations Solana names, all that. If the orgy gets going, you might find that this actually has so much inertia behind it that it carries on into the end of the year. That wouldn't surprise me at all. But names that I did do some nibbles on back in the spring after reload zone tests, and clearly the market did not have any interest in turning. It put up a fight, but eventually it lost that fight and had to move to new lows. This is exactly why the little old lady strategy works as well as it does, is that this was a very small purchase. It was a purchase nonetheless, but relative to the size of the portfolio, it wasn't that much. And the plan all along here is when this thing eventually does turn around and actually start rallying, this stuff goes up, it goes down, it's very volatile. I might even argue now, probably things like 50% rules should be pretty good objectives. So what I've done is there's the original purchase. Then I went on this dump here. We had pretty good market structure here. And then, pretty typical Brian, waited for reload zone tests and then started hunting reasons to get long. So this was off of Mountain Man. And nice double bottom came in. So I picked up a little bit more off of this original bottom. And the reload zone test of that. I suppose if I was really slick, I would have had my bids down here, but I don't think it quite hit shark levels. Then we go ahead and put in a cute little W. All right, well, it looks like she's trying to turn, so I worked a bid down in here and I got filled. So if I'm going to be doing any buying in the market here right now, it's just doing nothing more than just bringing my average cost down on these, getting ready for some sort of crazy circle jerk party blow off top event here into the fall. And in a weird sort of way, you can kind of see if this thing's going to rally, you can see the base, they're forming it. And if anything, if we do break out through this high, then you can start doing things like chaos theory. And we can probably start coming up with confluence of levels. Interesting 50% level up against 4669 there. So also 2.1618 right up against all these highs. So you can kind of see the level starting to congeal here. No guarantees from the management. No idea how this is going to play out. But just to let you know, and I have been doing a bit of buying in the crypto space. This is a pretty typical name that I've been buying recently, just adding to my bags down here at the bottom. So that's sort of what I've been doing in the market. And then, of course, like I said, and you might even argue that take profit one that I just had here, cyber, right? That same sort of logic. We popped up here. I saw the original bottom, threw my bid in, reload zones of that range, got filled, and then pop, up she goes. So that's sort of what I'm expecting here. As I said, no guarantees from the management whatsoever. We're just all here to play the game. I'm buying down markets, and should we get an up market, I will sell into the rallies. Keep in mind, too, this is a 4-hour chart. If we look at the actual daily chart, has this thing got any room to move up here at all? I think it's got a bit of room. Interesting how 877s, if we do bottom. Blow off tops, usually they do like to rally to 877, so it's interesting how that's up against that high. So anyway, that's a pretty typical sort of nibble that I do here. And now my average is down in this area. I think into October, I think I can see some money there, but we'll see. Only time will tell. So Bitcoin trend, to all intents and purposes, I don't really see anything shocking here. I think on the lower time frames, it looks like it's trying to find some sort of bottom. It'll be fascinating to see whether this long actually holds in here. It might not. I could actually see off of this range now. So that high up there, if these lows hold, and come on, you. Always drives me crazy with doing this. But I think you can actually see a new setup trying to form here. So there, down to there, and we'll go there. And of course, always drawn backwards. Also interesting too, if we actually lose my bot entry level and this thing gets stopped out, Interesting how that will also negate any new bot potential format if we start dumping into here, because we'll lose that 66% retracement. So this is actually a pretty important level, right? You might even argue, one of the best futures traders I ever worked with, good old Brandon. There's his buy level. He would actually step in and buy that level religiously. So that's kind of interesting. Anyway, if this thing is forming some sort of bottom, I see one higher low, I see two higher lows, I see three higher lows, I see four higher lows. Interesting. No guarantees from the management, of course, but if this thing is firming up here, we'll go clone, and we'll put that guy right up over here, and you can see the next setup starting to form. Boom. And of course, always drawing backwards. Let's go boom. And there you go. Long way away, bot entry. So this can play around in here a lot. I could easily see that. Interesting too, how I've conjectured here, I think 125 is an important level. And I like the idea that 125 is the pivot to set up 250 or a double. So I do think that this 125 level is a pretty important psychological level for the market. It's also like, well, it's pretty close to 2 bits. Well, not 2 bits, 1 bit. Ironically enough for Bitcoin. So fascinating how we're coming into the latter part of Sunday here. Clearly, if we lose this low, I think you can comfortably expect a dip probably back down into like these levels down in here. We might find some support in here, but we're going to lose that 66% retracement level, which means that this is now a trading range. Right, and you probably all know, of course, my reload zone, right? This is specifically for identifying where you want to be a buyer in trading ranges. And then once that's done, wherever the bottom ultimately comes in, you're going to look for the reload zone test going the other direction. And we're just stuck in a trading range, which usually is the case. So pretty important sort of battle that's going on here. Are we still trend continuationing? Or are we actually now going to park ourselves in a trading range and probably be here for a while? Did find it interesting that, previous setups that I've talked to, and this is sort of how a trader's life ought to go, is that you just try and keep it. This is another example of building those free positions. So this was a bullish setup coming out through this window where we were, hitting bot targets, alt ABC targets the whole way up. And we had 1/8 of the original position still left on the books after we took profits, rang the register, and just leave a little bit on just so you never know. I mean, this thing might go to $1 million. You don't know. This is a risk-free trade. Try and keep that damn hair on the top of your head. And if the market craps out, get stopped at scratch on 1/8 of the original position. The other 7/8 were all sold at profits. Well, that's what you're trying to do here. So ideally, and this is what I was at when I originally posted this tweet, I was like, let's see whether we can actually close this position out into that October peaking event. I don't know. And I guarantee you, none of you know either. Even though you say you will know. An old rule of thumb that we used to always have: you cannot write better fiction than actual reality. Whatever the ultimate story is that takes us up or takes us down, I can guarantee you none of us could sit down today and write a better story, because frankly speaking, whatever actually happens, I can pretty much guarantee you we'll all sit here and go, man, you couldn't have scripted that any better. That's insane. especially with this clown that's running the United States of America right now. Fuck me. I mean, this is bizarro world that we're living in. So, um, it'd be actually curious to see how many setups can we get going here with a little free position still on heading into this cycle peak. I don't know. I and actually maybe give me some feedback here. Is what I'm actually saying here, is this resonating with any of you? Is this information that just gives you a slightly different perspective than when you go out on social media and all you hear from is like the Bitcoin maxis and all that kind of stuff? Do I give you a little bit different perspective on the market? Keep in mind, some guy actually paid Gronk like $3,000 or $4,000 to predict where the price of Bitcoin was going to go, and the AI, I think the bill was like $3,000 or $4,000, said $400,000. Okay, by like November 2nd. So uh, who knows? Maybe he's right, maybe he's wrong. And hopefully I'll be selling this free position into that event. Fuck me, that'll be a huge number. I don't know. Nobody knows. Maybe Gronk knows. I don't know. Anyway, um, let's see, where should we take the conversation next? I think I've talked Bitcoin into the ground. I think I told you my sort of altcoin expectations. I thought this was a really interesting one because I trade with one gentleman who I think has turned into a very good trader. And I think that he has the type of mentality that actually works really well in futures industry, and that is very sticks to the rules, doesn't deviate. He sees what he likes and what to work with. And when he sees that criteria, he goes for it. So, and because the universe is a fractal, ironically enough, there's actually very little difference between somebody who trades off a 3-minute chart and somebody who trades off of a daily chart. If you're a technician, there actually isn't a hell of a lot of difference, which is so ironic. So this is a really good example where the market broke out to new highs. The moving averages were sitting actually very bullishly, especially right after you have one of these moving average tests. Very rarely does the market actually roll over and break. The bullish resolution of this, especially with the market going to new highs here, actually sort of almost like solidifies that, yeah, this is a pretty powerful uptrend. So I'm paraphrasing, and I'm sure I probably don't have the setup exactly correct, but pullbacks into 13 EMAs act as support. 13 EMA act as support. Everybody should know exactly who I'm talking about now. And then you just patiently wait, and it turns out, of course, this was at a very significant trend line. So this is a huge battle level in the marketplace. So market pulled back right into moving average support, right into that trend line. And then, oh, hello, there's a nice polite inside bar that fired. And this, to all intents and purposes, is a 3-bar fractal. So as I, was explained to you off of the Bitcoin chart and why we're sort of getting a bit cautious, this is a 3-bar fractal fail. This is a 3-bar fractal reversal that breaks that fail, and they took the market to new highs. Now, we might get a new 3-bar fractal fail signal here, but we won't know that until the end of next week. So until that actually happens, I'm still thinking up based off of this bullish 3-bar fractal breakout. Same logic here. I have to, there was a pretty big diamond pattern. It's a sloppy one. And in essence, the 3-bar fractal top is this bar, and this bar. So that means if this 3-bar fractal fail went through this low here on this particular week, that would be a sell signal. But what did they do? 3-bar fractal bullish with an inside bar off of the test of the 13 EMA and this really important trend line. That's bullish, not bearish. So I wouldn't fight that. And frankly speaking, that's actually a setup. Like I said, gentleman that I have immense respect for, and he's funded at my old prop firm, so he must be doing something right. That is basically one of the setups that he tells me that he loves to trade. So how ironic. Market's actually giving us a buy signal on the broader crypto market, even though when you go out into the public, God, you think you listen to people, you'd think that there is going to be no altcoin bull season. And of course, this also is heavily political as well. I do believe that there are various factions that have political vested interest. Keep in mind, everybody talks up their book. So if you've just made a decision, all altcoins are frauds, but Bitcoin is the only thing that's real, then you're one of these Bitcoin maxi people, right? And that is a heavy political vote in this space. And then there are other people, of course, that are altcoin maxis and whatever. I mean, I would actually consider myself agnostic. I don't really care. I think all of these assets are speculative. I think, to all intents and purposes, Bitcoin has been institutionalized. I think things like Ethereum have been institutionalized, which is even more dangerous for the public because institutions buy down markets. How are they going to get you to sell to them in a down market? They are going to work your anxieties. They are going to work your fears. They are going to try and get you to FOMO buy the top because TTID, oh God, as soon as we start hearing that in the market, you know that the top's in. And unfortunately, in bear markets, right, they're going to really jazz. Well, do you realize how risky this is? Well, government's coming after you and all that kind of shit. Yeah, so. Anyway, so the point of the matter here is actually I just got a recent buy signal on this crypto market cap. And I actually think that we are heading towards this lunar eclipse event. I think that is the pivot cycle event that I'm looking for here in the near term. And then through that eclipse window, we should probably go through a pretty crazy ass time. I think I showed you what Bitcoin did through the, well, actually, maybe I have it on here. I don't think I do. Where is it? Over here. So that was March 17th through March 31st. March 17th. There. March 31st. Oh, what a surprise. Yeah. So this is actually exactly what I'm kind of thinking is you can see in this case, down, 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 down. Then we go through the eclipse. Oh, you know what? Maybe we're a bull. No, okay, fine. Oh, no, one more puke up. So actually, I think it's the exact opposite here. So we rally up. We're a bull. Oh, maybe we're not. In this case, it was, oh, you're a bear. Maybe not. So I think, we're a bull. Oh, maybe not. And then one more big push into that October 20th cycle event. And that's kind of this move here, but to the upside. And who knows, keep in mind, they often take prices way further than anybody ever expects. And that's, does Liam get his house? If he does, awesome. Woohoo! If he doesn't, well, we'll just wait another 4 years until the next cycle, I guess. On balance, I don't see any major technical damage being done here, and it doesn't make sense why the market would actually break down in earnest with all of this shit just right in front of us. That doesn't make any sense to me at all. But I did find it interesting that who, and frankly speaking, I don't think he did any of us in the West any favors. I mean, that Putin guy, I hope you all saw that. I mean, that was laughable. That was not Vladimir Putin, the dictator of Russia, that was at that meeting in Alaska, by the way. And I did watch one guy on social media pick apart all of the tells of the guy that was in Alaska there that clearly pointed out that it was not Vladimir Putin, it was one of his body doubles. And I have a feeling that Mr. Trump, after meeting and talking with him for an hour or so, actually saw that indeed Lavrov was actually sent with this guy. And it turns out that all of the talking points of the actual meeting were actually done through Lavrov, not through this Putin substitute. I mean, it's laughable. It's ironic that through social media, I got goaded into some Arnie video bitching about Trump being an idiot. That it turns out this was actually a few years old, so I look like a doofus because I got suckered into all this. But it was so obvious watching this that there was nothing that was going to come of this. I mean, it was laughable. And the only reason why this happened at all, in my humble opinion, was to somehow get the public to stop talking about Mr. Epstein. And I think it, to all intents and purposes, it worked. Now the question is, with the absolute ridiculousness of this, and frankly speaking, the whole thing just stunk. And there's really sad. There's some memes and stuff of like U.S. soldiers down on their knees, and people are making memes and stuff about that. Like, man, America sure has fallen. But anyway, all I'll just simply say is I think that that whole thing was just a big fluff job, and I find it fascinating that I think that this Trump coin is actually a pretty good proxy on what the public actually thinks of Trump. And I haven't seen any major breakdown in here. Um, I don't know whether he scored points. And keep in mind, the United States of America is highly, highly polarized now anyway. The people that hate Trump hate Trump. The people that love him love him. But what the big question I had was this whole mega thing going to completely unwind with the fact that he clearly is wrapped up in Mr. Epstein, and he's trying desperately to try and get the conversation off of that. So anyway, did he achieve his aims? I mean, the meeting in itself, I think, was completely laughable. But I think he got what he wanted, which was just to get these megas to stop talking about Epstein. Anyway, we'll see if it has any traction going forward. Keep in mind, Richard Nixon never actually got into trouble about Watergate. What he actually got into trouble about was covering up Watergate. So you might find that with Mr. Trump, it won't actually be anything that he specifically gets busted for with Mr. Epstein, but the actual cover up is actually what might undo him. Well, it's going to be an interesting soap opera going forward, that's for sure. All right, that's now 12:30, so we got about a half an hour here left to sort of answer any questions or take a look at some charts that you guys think. Long range crypto says 250K, no way. Oh, boy. Janta Rai says, hello, Brian from Pakistan. Hello, Pakistan. How many? Two questions. All right, here we go. Always fun. Remember, no guarantees from the management here, that's for sure. I'll give you my 2 cents, but I think the current bid's about half a penny or so. Where is Chris? There he is over there. And the AMA document is there it is there. All right, let's see what we got here. All right, this thing will jump over here when it's fully loaded. Come on, there you go. 97 pages. Wow, I've been doing this a while. There we go. Hi, Brian. Could you take a look at two cryptos, STND and USUAL? Thanks, West Coast Wizard. All right, STND. Let's see what you got here. STND. Cryptos. Now, where the hell should we look at this? Luna. Lunar. Oh, that's different. KuCoin? Geez, you don't get much to choose from here. West Coast Wizard, are you over there on YouTube? Oh, whether we saw him here today or not. I don't see. Where should we look at this? Somebody give me some help here. Which one do you think we should look at? Probably KuCoin, eh? I think the Koreans, they love to speculate on crypto. Uh-oh, ouch. That doesn't look good. Well, I can't comment on the fundamentals. Technically speaking, I don't think I would fault you if you're a buyer of these W's. W's are W's are W's. And that thing sure has come down an awful long way. Eh? Holy shit, look at that. Jesus. What a shame. Are the original principles still involved in the story? I mean, I really wouldn't have a problem if you worked obviously with speculative capital. Money that you can afford to lose. Don't go and speculate with rent money on this stuff. That's for darn sure. It's something along those lines. It looks like the primary trend line. So also too, this is probably a really good example of that venture cap reload zone kind of concept, 78.6 to 88.6. So if you did want to join the party, considering that, there is the clothesline breakout, all the way up there. No, it looks like this is kind of cheap down in this area. So as it stands right now, not really the best trade location. I mean, there is Mountain Man, but you can see this would be Mountain's trade right here. Buying there and that bounce all the way back up there. Sell a bit. Maybe there's like a moving average tag or something right there. Stop at scratch, and he'd be stopped out at scratch on the runner there. Making lower highs. Well, actually now making a megaphone. So not a setup that I would be interested in doing anything on. Probably, if this is actually a megaphone, then the third tag of this bottom line here should actually set up some sort of pivot trade. So I think ideally you'd love to just see, can I get some sort of pivot right down in here, a nice little W. That would be awesome. Like so. Not much help on the indicators here. A little bit of a bull div forming on MACD. I don't like it when MACD looks like this though. I want, grade 3 English teacher. I want a W, which means that this is going to have to roll over. It's going to have to test these lows and then turn back up. So how long does this take going down here to get the moving averages to roll back over and test these lows in earnest, and for us to actually see if this is a structural bottom? I don't see it yet. So we don't have trade location, and Willie still isn't technically stupid. So notice Willie goes stupid. Now you can start thinking, all right, where the hell's that damn W? Where are those bottoms? Rah, rah, rah. You can see there's a cute little MACD actually came in. You can see that it's not the best structure, but at least it is a W over here. Sort of in actual fact, oh yeah, there's an even bigger one. There to there. Yeah, that's it right there. Right down, up, down, and breakout right there. So interestingly enough, the MACD momentum divergence actually confirmed on that move right there. And then kapow! And Adam's little inside bars, probably 13 EMA check. Anyway, so as it stands right now, Willie's not stupid. Actually, it looks like it just put in a structural failure. RSI just put in an M below the moving average. For me to actually have that buy setup, I need to see like two W's in a row off of RSI. So there's nothing there yet at all. So if I was going to do my LICS, right, 3 reasons to justify risking your hard-earned money in the market. We are not even at location. So if we're not even at location, you can't even think about the rest. You got to wait for location, which to me looks like somewhere down in that area. So I think that's probably the best way to speak to that question. I'm sorry. Standard. And then we'll go, what was the next one? USUAL. Finance, tethers, that's still the popular thing. Oh, now that's much better. I'd be willing to take a shot off of this. You can see clearly the bot never did form, so that's interesting. Great testament to, hey, let's get 3 higher lows. Nope, never came in. It's gone. So now we're talking about trading range asset. That trend continuation pattern is basically done for the time being, in my opinion. I do like the idea. This is our shark setup that we have in the library. Bullish market structure, big pop. Test of 786s is your buy setup window. And frankly speaking, that's not a bad area to go shopping. So you've got location. Does look like this made a new low. So a little bit tough here. Pop off of the lows. If anything, this is also looks like a megaphone. All right, so we can go there to there and there to there. So does that mean that we have to have another dip against these lows, back down, candle body lows for trade location? That looks really interesting. Those bears would love to get released. Unfortunately, this is an M, so M's are bearish, W's are bullish, and this never really was a W. So what you'd really, if you are a bull right in here, what you'd love to see, there is an inside bar. This is probably a really good example of a trader's life. I think you could justify there to there. Ooh, reload zones, venture cap reload zone even. And then, boom, nice little inside bar reversal. Harami. I would call this a bull rammy because baby's feet are sticking outside of mummy's yaya, but the Japanese actually are fine with calling that harami. So then, had you taken that, maybe this would be better off of like a 4-hour chart or something. Yeah, you can see it's a little W down there. And if we change these indicators to like a 4-hour, you can see Willie never really did get stupid, got close. Didn't really get clean bottoms. I suppose you could mount. MACD didn't really make a div. So I don't know. I think this still needs to be tested. And maybe this might even be like a reload zone within a reload zone within a reload zone kind of idea. If this is the bottom, right? I suppose you could argue, I think our daily chart, that harami, right, was in through here somewhere. I suppose a trader, it wouldn't be the end of the world. And I'm going to buy that. It's not the best looking W, but then I'm going to risk to a break of these lows over here. So I'll let them fuck around with all this, but I'm actually going to risk against this low. So 2-to-1s, not a bad level, just to keep you honest, something like that, which is nothing more than, this original conversation that we're not trending higher anymore. We're stuck in a trading range. So buying down against the bottom end of the range, you're just looking to take some profits up against the top end of the range. And you might argue that really there is your primary downtrend line, roughly, right against that high. So I wouldn't even be surprised if you could pop all the way up top here. But probably what happens is, and that's assuming that this low holds. It's a dangerous assumption. But I actually think if you really did want to trade this, I'd almost like to look at this as an atom. And then if you could get an Eve to come in here, that would be an awesome setup. But that still needs a bit of work. And I actually don't really see a hell of a lot on the indicators here to actually lend support to that. I would actually like to see price go down and take out this low and trade down to this megaphone. And then that forces the indicators to roll over. And if we test that low and it holds and we turn back up, then you have your momentum divergence. And then we can move on to, all right, now can I have a W in price to work with? Right now, it's stretching it to say that there's like buy setups here. I like the location. Don't get me wrong. If I was little old ladying this, no problem. Considering how far this thing, if it ever gets its act together, can go. Okay, but you might add the same attitude in here, and then you have to sit there and do absolutely nothing for another 6 months. Oh, what the fuck, Brian? I thought you said I was going to get rich. So understand, little old ladies, they're not really timing the market. They're just coming in, taking appropriate risks at the bottom end of ranges. So little old lady-ish. Probably if you see this W confirmed, then we're probably rocking and rolling. I guess what I'd be fearful of is that this W did fire. We were rocking and rolling. Woohoo, big party. The guys who bought down here, not a big surprise. This is 6 and this is 12. What a surprise. They probably sold halves on doubles, that kind of thing. Are they reloading? Well, let's try and get some higher lows and higher highs, right? So far, we've got a lower low here, and we're trying to carve out a higher low. Hasn't come in yet. If you wanted to take that shot, okay. But I just don't have enough to actually call it a setup. I would just simply call it just, it's acceptable trade location. Probably best just to let this develop a bit, see some divergences in indicators, see some W's, see a W in price, and then you can start feeling a little bit more bullish. So that would be my answer there. Yeah, I think 12 minutes of purposes, that's it. Let's go. Don't necessarily need that or that or that. I'll change this, get rid of the prices. So hopefully you can see that inside bar. In fact, actually, it looks like the inside bar buys a little bit higher. If you did want to trade that and you wanted to risk to new lows here, well, then you got to force yourself to stick around here. I do trade a lot of futures contracts with just a 1.5 to 1 risk reward because, futures are so schizo. But I absolutely, without a doubt, have 50% of that anticipated move stop to scratch. So if we did happen to turn here and we had any kind of counter turn rally back up top and we hit that 50% level and then we start to puke out, I would just walk away if this thing got back to that level. That's from a sort of trader's perspective. Hopefully that gives you sort of what I would see there. It's not something that I go, holy shit, that looks like a buy. It's close, great location, but it still needs to do a little bit of work. That's my 2 cents there. All right, so there are the two price charts, and if you have any further questions, do a follow up here. We can always circle back around tomorrow and follow up. Okay, question number 2, and I got 15 minutes left. Actually, I've got a little bit more time than that. So, hi Brian, I know you're expecting a late October, early November peak for Bitcoin, but when are you looking to take profits on altcoins? Well, whenever the market affords me the opportunity. Do you think altcoins will rally into November or December as people rotate Bitcoin profits into alts? I don't necessarily think it's going to be like the top comes exactly on this particular date. You can see in previous cycles, this cycle, the top came in a few months ahead of the event, but that was all about Mt. Gox. This cycle came in just slightly ahead of the event, this cycle peak. That was all about the CME Bitcoin futures. This cycle was a bit tricky, right? This cycle actually, I think, peaked 6 months ahead of the event. And then we just went up a little bit higher into the actual 1.382 and then puked out. Ironically enough, this is about, I think, the only one in the entire cycle that was actually right on the 1.38. I'm not here to say that the Bitcoin market is going to top out exactly on October 13th. I'm not here to say that whatsoever. The market will top at whatever price, whenever it is going to top. That's just the way it's going to be. And anybody who says that they can predict that kind of stuff, I think they're full of horseshit. Just understand the context of what's going on here. So to answer your question, the market will top when the market tops. And we all know the letter of the alphabet. And when that letter of the alphabet comes in, well, you better temper your enthusiasm. You probably are all aware that I will be leaving TRI at the end of the year. And if I'm not mistaken, I think Stuart and Julian have created a sort of a formal document outlining what the formal message from TRI will be around that. So by all means, look for that going forward if you want a little bit of clarification. But the bottom line there is that as of January 1st, I will not be a part of TRI. So the plan was to basically just liquidate all speculative portfolios, go to cash, and then just pay out the partners the cash balance. And then if Julian and Stuart want to continue doing trading, well, they're going to be running the portfolios as of January. I'm no longer involved. It's just simple as that. All I will say to that is if you would like to continue working with me and following me, then you can always follow me on this funny X platform, CR Investor. And I also have a private social media channel that I've built that I'll probably be doing all of these same kind of social media events off of. And if you are part of the site, you can DM me on the site, and I'll be more than happy to tell you what my plans are and where you can find me. So I think we'll probably just leave why I will be doing what I'm doing, when I'm doing it. And I specifically planned this because I want to leave this space with the market happiest. I can absolutely tell you without a shadow of a doubt, it's often very ugly leaving these spaces through down market states. So it's better that I just plan to slowly walk away when you all are feeling happiest. And I think it's probably the best way to wind up this business partnership when things are relatively liquid and the public is relatively interested and active, and everybody's in a relatively agreeable frame of mind. I can tell you, my gut feeling is 1 year from now, I think we're all going to be feeling collectively very, very different. Um, Not predicting the future, but uh, I've played this game long enough that I know that when the public is generally happy and feeling generally good, that's a good time to slowly, just quietly exit. And actually, Johnny Bollinger made his public an exit announcement last cycle through all of the insanity around, ETH and DeFi going to take over the world. And, public people like that, Raoul Paul coming in and just blindly acting like the public and just over the top euphoric. Johnny Bollinger was like, all right, this is my public announcement. I am slowly exiting this space. So hopefully that speaks to my motivations around the end of this year. I don't really have a problem. And frankly speaking, if I had done this the way that I wanted this to go, I would still be long all of these original purchases that I made way back when. But because of this partnership, I was actually forced to liquidate this portfolio. So if it was up to me, to be perfectly blunt with all of you, I would actually just leave these assets. Just let them work. There's no reason to touch any of this. Once you've established a risk-free position, it's risk-free. Forget about the rest of it. It's a non-issue. And these crypto assets, you can always move them to cold storage wallets and just let them sit there. And frankly speaking, that's what I would do. Now, I hope that speaks to your question directly. It's probably best that I just leave the conversation at that for now. So the reason why I will be liquidating this portfolio is simply due to my departure from TRI. Simple as that. All right, and you all know my plan with Liam and his bitcoins, and really they're my bitcoins, but I affectionately like to label them his. Is if I can achieve a certain objective, then I will liquidate the position. If I can't achieve that specific objective, then I'm just going to leave them alone. And yeah, the market will go down 80%, but so what? I don't need the money. The assets are just sitting there. You can't predict the future. Maybe Bitcoin does go up to $500,000 here and Liam gets to buy a mansion. Who knows? So if I had a basket of these crypto assets, it would be exactly the same thing. Get yourself into a risk-free position. Then with the remainder, go put them on a cold storage wallet and bury them in the backyard. All right, that handles all those questions. And by all means, if you have a follow-up, feel free to post. We can circle back around tomorrow. Questions over there on the actual YouTube channel. Let's see. Hello, Long Range Crypto. Hello, Pakistan. Elavorn. Hello, Gilts. Hello, GLS. Adam. Mr. Loris Bello. The Matador. Joshua McGowan. Andrea. Easy K. And Nora and Kevin, way up top there. Hello, all of you. Matador saying retail investors thinking like institutions. Okay. Say goodbye to your wife and your comfortable bed because you're going to stay awake babysitting your Bitcoin. So that sounds like fun. Is that from, is that his name? Ken? Jesus. I can't pronounce names to save my soul. Elephant coin looks heavy. R. This coin is really cheap. All right, not sure which one that is. 2nd of November 2025, Grok said Bitcoin was going to hit 400 Gs. If that's the case, I will do a little jig on air in front of all of you. In fact, I tell you what, I'll make you a deal. And everybody hold me to account on this. If that Gronk is actually correct and that does happen, I will pay Alan's fee and I will become a paying member of his platform. Somebody remember that. Other than that, I just use the free service. Get your skirt together. That's right, Norm. That was absolutely perfectly timed too, and yet nobody listened to me. Well, that's not true. I mean, I think you guys do. Gordon says, do you use the stochastic RSI in your arsenal of tools? If so, what settings do you use in TradingView? Stochastic RSI. Yeah, you could. I mean, what that's going to measure is the stochastic oscillation of the RSI indicator. Usually when I was using stochastics in the past, there's different forms of stochastic. There's a slow stochastic and then there's a fast stochastic. And what I would actually do is have both of them on the screen. And when the slow and the fast both turn at the same time, that's an incredible signal. So it really all depends on what setting of stochastic you like to use. And then, as I said there, stochastics on RSI, we'll even say that. Stochastic on RSI is, what is stochastic? It's, oh God, now you're really testing my TA remembering skills. Let's just do a stock. It doesn't really matter which stock. Stochastic RSI is, oh God, I can't remember the definition just off the top of my head. I used to do all this stuff religiously day after day after day. I haven't used this in a while though. Me personally, I don't really mind going with the out of the box settings here. I don't even know what these settings are. 3 3 14 14. Okay. It's been a while since I've used this model indicator, so I probably have to bring myself back up to speed with it. But to all intents and purposes, overbought market state, be careful, don't chase. Oversold market state, probably a good idea to be looking for pivots. Then back again, overbought market state. Really good example of divergence right there. So once we got up here, maybe this was like a trade location, maybe like, I don't know, 1.618 chaos or something. Even better, 2.618. So trade location, indicator confirmation, price structure, show me that damn M, where is it? Looks like that's the highest high. So you've got one, like we just used licks. Let's keep it simple, stupid. So one check. All right, we've got location. Indicator confirmation. Oh, hello, bear div. Market moving higher. So we have indicators, overbought. You could use the indicator to give you the overbought. Indicator confirmation, that divergence confirms right there. So at this point, right there on that weakness, you can say we now have LI and now C. So we can say check to see. And now all we're looking for is price structure. And oh, isn't that an M? Up, down, up, fail. Sell signal right there. Or you could say, well, I like to trade triple tops because I'm a chicken shit like that Beamish guy. And I need to have 3 highs or 3 lows to risk against. So you wait for that 3-bar fractal fail, or even that double top, triple top breakdown, and your sell signals here. I don't care either way. So what do you think? Who asked that question? Gordon Rico. Gordon, are you here? Do you see sort of it doesn't really matter what indicator you use, just try and follow this LIX principle. Location, indicator confirmation, price structure, go. And I just grabbed this right out of the box, really straightforward. Location, right there, indicators overbought right there, indicator confirmation, divergence right there, price structure right there. And what's the end result? And I just grabbed this out of nothing. Isn't that kind of cool? You see how I do that? I mean, that's the irony of all this. I just randomly picked this out of nowhere, and you can see the setup as plain as day. Isn't that incredible? Oh, maybe it isn't. I don't know. Thank you, Jim and Liz, if you're watching this later on, or if Adam, you can convey my thanks to them for best wishes with Liam this afternoon. Thank you, Nure, as well. Thank you for those best wishes for Lily. And thank you, Michael. Oh, you guys are so awesome. Your opinion of Chainlink. Please explain how to add questions to your doc. I think you can just go on the website. I think Chris posts the AMA fairly regularly. So if you are a member of the website Nixie, it's pretty easy to find it in the lounge. You want me to look at Link? Interesting from this perspective, completely different, but can we use the LIX principle on Link? Binance, actually, I am long a bunch of links, so I suppose that's a good sign to see. So who can tell me, is Link overbought? Well, looks like it was a little bit dangerous there. Could even argue a bit of a divergence here. Market's making higher highs. Indicator is not. Indicator is overbought. Careful. Down she goes. Nice little W in price. If that was a half decent trade location, maybe like a bullish bot setup or something through here. The indicators are officially oversold. Turn back up. Nice little bullish structure off of that level there. Up she goes. So I don't really see anything shocking. If anything, this is kind of cool. You can see the bull div there. So at this point here, we actually have indicators stupidly oversold. Then quickly the market jumped up and confirmed that div on that event right there. A little bit overbought. So this is one reason why I wouldn't use this stochastic, is the indicators is parked overbought here. So, but I do like the idea that this is a bull ABCD kind of idea. Boom, 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 boom. So it really wouldn't have served me well here. I suppose you could argue, well, isn't that a W there? But it is overbought. So I don't know whether I'd feel that comfortable. So according to this indicator here, you would have been frozen out on that whole move up there. So that's one reason why maybe I'm not that enthusiastic about stochastic RSI. If if I just use my model, there is my MACD bullish divergence. That's what I really want to see. There is Willie. Ooh, stupid right there. So LIX, I've got L, right? We said that was, oh, even better. Look at that, right against those beautiful reload zone. You've got indicator confirmation, divergence, Willie stupid. So now it's just a question of, okay, can I find some W to get me long? And I think the W comes in sort of through here, and you'd ride that move up there. So here now on Link, can I do anything here right now? Absolutely not. On the buy side. I suppose if you did buy that level there, which is a pretty sexy level, that's what, 13, 14 bucks. So at 28, you'd have sell half on a double order working. I'd probably also say too, this YW here now probably is going to paint chaos target. So interesting, 2.618 sitting up at 29 and change. And our entry here was from 14 and change, and double that is 28. So I think you could probably shoot for a move up into that area. At that 2.618, you're probably going to run into a brick wall though. And I wouldn't be surprised if we do back up here that this is a reload short zone. What do you think the odds are? Survey says bonk. So 88.6, 2.618, doubling off of the original bottom. We could probably also do fib extensions. Mind you, this probably has already been hit. So things like parking garages. 2.618. Ooh, that's where we are right now. So we've already gotten to the top of the parking garage. Anywhere up in here, to me, seems like a perfectly logical place to look for exhaustion. And I mean, look at that damn move. It's straight up. So we could also probably do like A, B, C, Ds. So A, B, C, D. So we've already hit that. This to me looks like an alt ABCD. And if that's the case, then 1.618 becomes our no-brainer trade location. So where is that? Survey says. Whoa. So if we, this is the ABCD level, right? ABCD. This is the Alt ABCD level stop 1, and this is Alt ABCD stop level 2. Considering that 2.618 is up in there, I would expect that this thing probably stabs up into this area to finish this move. I suppose we could also do a parking garage off of this range as well. Yeah. So there's the top of the parking garage. 2.618 up against the original highs. There's lots of reason to look for some sort of pivot right up in this area. So would I outright sell short? No way. No. Maybe we're coming into trade location, but let's see. Are the indicators overbought? Willie is not stupid yet. So Willie has to get to less than minus 20 to get stupid. And this looks kind of W-ish. Lots of W's all over the map here. Now this might div out, right? If that MACD cannot go to new highs, then you can start to see the divs forming. So if anything, what this says is way too late to be a buyer. Starting to enter trade location for tops. Not there yet. Indicators are still pointing up. They're not overbought yet, but you can start to see the anecdotal evidence of potential divergences forming, especially off of this RSI study and the fact that all of these highs here of recent are much lower than that high there. So in a weird sort of way, you can kind of see the end of the move is starting to develop here. I mean, look at all these divs, tons of potentials, nothing confirmed yet. So the path is still pointing up, but we're getting late in this story. And what the hell? That's been a pretty big move. I don't know. Did that give value to anybody? Do you understand what I'm saying here? Anyone? Anyone? Dealer? All right. Let's see. Jim. Not sure if a 4.5 trillion inflow is possible in a 3-month window, but we'll see. That'll be 400K target around 8 trillion market cap. Mark Crocker says, is Paul J the trader you were talking about? Paul J. Paul J. I don't know who Paul J is. I don't know. There's Mr. Cotter. Actually, Mr. Cotter, your stock's a buy. Fuck me. I went and bought some. I'm surprised I hadn't seen you around the site, but I think your stock's a buy. Look at that, son of a bitch. Look at that momentum picture. That's look how RSI. I mean, this has got Sjord written all over it. Look how RSI, the Bollinger Band's all tightened up here. And now we're getting an explosion out of the range. That is just uber bullish, like Brian and his two W's, right? So there's this big W, and that just confirmed, but there's also this W. So that's one W, two W's through the 50 line. Let's fucking go. Woohoo! And I don't know what the hell this implies because this is an ammunition stock. Uh-oh. What does that mean? Granny, get your gun. And just look at these indicators. They just look fucking incredible. Look at that OBV. Oh my goodness. So I was wondering where you were. Anyway, I went and bought some more of your stock there, Mr. Carter. Paul J from CTA. Geez, that doesn't ring a bell at all. I don't know what that's in reference to. CTA, what's that? Commodity Trend Advisors? I don't know what CTA stands for. Anyway, Chicago Transport Authority. Oh, okay. All right. Nick C says, yes, sir. Thank you for your analysis. Level 1 member here. All right. Good, good. And I suppose shout out for the education program. Start a new school term here in a few weeks. Probably one of the, I think this is the last quarter that the current education program in its current format will be available at TRI. Of course, you all know in the new year, I'm heading out on my merry way. And I think the plan by the TRI team is to try and create some sort of automated basic education program on a site like Evergreen or something like that. I can't remember the name of it for the new year. So if you want to take the education program at TRI in its current form, this is your last opportunity. This is also a shout out to any of the OGs that have taken the education program. If you want to do a sort of refresher with Brian, this will be the last time Brian teaches the level 3 at TRI. I have added a bunch of new stuff to the program over the past few years. So if you had taken the program in the past, we're asking everybody to just throw in a couple $100 to cover the admin costs. Utah level 3ers like OGs on the site might be a good idea for you to just do a final brush up with me. It won't cost you much, and get you well positioned for the new year. And on a side note, for whatever it's worth, I am working with 10 individuals, one-on-one
recording
coaching.
Stopped.
Oh, look at that. We just finished the recording. So 10 individuals in the new year. 2/3 of those seats are taken. It's a 1-year program where I'm working with you directly one-on-one. If you are interested, feel free to DM me on the site or on your social media platform of choice. I can give you the details of that one-on-one training program. But that's for people who really want to be traders. So people who are just sort of like, I'm a little old lady. My suggestion to you is take the level 1 program. If anything, what I like in the new year is for people who want to just learn basic trading and investing and setting yourself up, running your small business of trading. I like the idea of just referring you to the TRI Basic Level 1 Education Program. And then if you want to get very serious about your trading, like I said, I'll work with 10 individuals. As soon as those 10 seats are gone, then they're gone. And you get put on a reservation list. If anybody drops out of the 10 seats, then wherever your place is on the reservation list, you're up next. So if you want to work with me individually in the new year, I would strongly suggest that there are only 3 seats left, and when they're gone, they're gone. So keep that in mind. You'll DM me on Truth Social? Ah, yeah, right. I don't think you'll ever find me over there. All right. I think we'll probably leave the broadcast at that for today. Nick says, thanks, Brian. I'd love to hop in that refresher level 3. When does the new semester start? Starts in early September. Usually we start the week after the Labor Day weekend. So go and poke Julian, and he'll get you set up for that. And frankly speaking, this fall term should be really fun. It should be sort of a grand hurrah. And we all live, obviously, with the uppy crypto market. We all live on a nice, happy, positive note heading into the end of the year. Okay. Let's leave it at that. Have yourselves a fantastic rest of your day. PMA for the win. Slow and steady wins the race. Try not to take any wooden nickels, as they say. And the only thing left, Brian, to say to you is already bye for now.